Last week, we started the dive into Nelson Nash's Becoming Your Own Banker. We covered chapters 1 through 3, which was the origin and the philosophy of infinite banking. This week, we're going to cover chapters 4 through 7. This is the core problem and then the mechanism behind infinite banking. And what we're hoping that the listener gets out of these is we're just doing a summary of these chapters because it's really important that you actually read the book. The book, Carlo and I were talking last week about this, the book is formatted in a way that's like a really good marketing material. And the thing that's good about marketing material is it kind of gets you excited about it. It helps you to better understand what's going on. And it does that through a series of different examples and stories. And we're not going to just plagiarize the book and go through it word for word here. So what we're trying to do is give you a quick summary and then also our thoughts, maybe things that might be a little bit different or things that we see different about it to help complement your reading of this book. So I hope you enjoy this. I hope we're successful because this is the Life Insurance Financial Education Podcast where we're trying to pull back the curtain on high cash value life insurance and how it can help you build wealth and achieve your financial goals. I'm your host, James Barber, your Oregon Cash Flow Pro.
And I'm Carlo Vaquero with NetWealth Finance.
And we're jumping into becoming your own banker because it is the cornerstone of the infinite banking concept. And while there's a lot of things about the infinite banking concept and the practitioners and things that there's a lot of disagreements among the communities about policy designs and how soon you should borrow from them and all of these things, the one thing I think we can all agree on is that this book was instrumental in growing the concept and getting people understanding how you actually can become your own banker and what types of products out there help you to do that. So let's jump in to chapter 4.
What we could call the all-American financial tragedy. And really what that comes down to is a high percentage of a family or a person's disposable income going to interest. And this is not uncommon. This is a regular thing, whether that's through your mortgage, car loans, various other things. If you're paying, hopefully not paying credit card interest, but that is something that does happen. There's so many ways in which we are paying interest. And the big thing is taking back control of that. And that is the tragedy that's laid out is you have a whole lot of interest you're paying, taking control of that, and maybe recapturing some of that interest that is going to financial institutions.
Yeah, Nelson uses this chapter to really highlight the issue, which is everybody's paying so much in interest that it kind of pales into the small amount that they tend to set aside for growing their income. And essentially he highlights that we're going to finance everything that you buy in one way or the other. You either pay interest to someone else or you give up interest that you could have earned. The opportunity cost. Ultimately, he says, this outflow of money prevents wealth accumulation. The focus should be on controlling the financial environment to create a perpetual tailwind rather than a perpetual headwind akin to flying an airplane in favorable air currents. And he has a number of good stories to highlight this.
Yeah, and the way that I like to think about this is I describe this in some of my videos, is locking in compound interest gains. That is a big factor that when you start funding a policy, you start earning compound interest and you really never stop. And when we offset financing that we might do elsewhere and getting a good rate with our policy loans, that is a really big thing in getting gains and reducing the amount of interest that we're paying to other institutions.
Yeah, and that leads us into chapter 5, which is one thing that you could do is maybe create a conventional bank. Kind of out of the realm for most people. Becoming a conventional banker costs a lot of money. It's very time consuming. And you basically need to find a commissioner and get a charter for a bank. Out of the realm for most people. So the difficulty of controlling the banking function is essentially impossible for a regular folk to do.
And not only is it impossible, it's really just not something that most people are going to even want to do. There's a lot of overhead in that it's not practical or useful for most people to actually do that. So that is where you can have somewhere where you can store your value and really build your wealth and still have access to that financing that you might have with a traditional bank.
Yeah, Nelson basically compares the complex process with the simpler, just buy a whole life policy. You do a participating policy where it's paying dividends from a whole life insurance, from a mutual whole life insurance company. And it basically gives us all the ingredients to create our own personal banking system.
And that's really where what he dives into in chapter 6 and 7 is this idea of dividend paying whole life insurance being that foundational product that you can really use. And in many ways, when we've had discussions, there's other things that you could use potentially for this, but permanent life insurance, high cash value life insurance is one of the best ways that you can do this because it's one of the most secure assets in existence. And really, the returns, especially on the whole life side. So Nelson Nash was very much on that mutual company whole life side of the house. That was really what he was dealing with when he was implementing this concept. And it is great because you do have some guaranteed growth as well as that surplus dividend. And it is a great tool for implementing a banking system.
And really, the reason I think he highlights a mutual company is because you become part owner of that company. And if you're going to create a business, you've got to be part owner of it so that you have that control. And with life insurance, you're getting into a lifelong commitment that has contractual obligations from the insurance company. So it's important that it's a mutual company because of all the benefits that that provides. And there's nobody else that that company is beholden to. There's nobody else that it generates those profits for besides the policy owners themselves. So you're in alignment.
Yeah, and that's another key. Having that contractual obligation and contractual ability to access those funds through policy loans, it's really pretty unmatched. Even if you have a brokerage account and you want to do some kind of securities-based, margin type stuff, a lot of those things in tightening markets can either make it cost prohibitive for doing that, or they may even close your line of credit, especially if your positions are taking a large correction. That's why an asset like whole life is super solid for doing this with and partnering with these companies through being mutual companies and becoming an owner in it. It is a really powerful thing, and why, I think to this day, a lot of the practitioners in this space who like life insurance as a banking system, most of them still probably will say only whole life is the answer. We may not agree with all of that, but it is a really fantastic tool for setting that solid financial foundation to be able to borrow against.
And chapter 7 gives us summary of the basic understandings. Number 1, you finance everything you buy. Number 2, create an entity which you control and makes money on your loans. That's your life insurance plan. Number 3, the dividend is a tax-free return of premium, which when used to buy additional paid-up insurance results in continuous compounding. Number 4, banking is a process, not a product. We talk about infinite banking, utilizing whole life insurance, IUL. Those are products, but it's not the process. And this book is about the process. Number 5 recaps the importance of imagination, the grocery business lesson where we talk about don't stealing the peas, the money problem, that's that interest going out to everybody else, and then the cost and difficulty of creating a conventional bank. And then number 6, the capitalization phase, which requires time and discipline, where you've got to build the basis of that bank.
And that is really key as well. Having that capitalization period, it's just a reality. It will take a few years to really build up, but that doesn't mean you lose access to all of those funds. When properly designed, and this is probably different from the policies that Nelson was designing when he was in the business, but these days we can have optimized designs that are very high percentage of access. Talking 80 sometimes 90% access to cash value in year one of your premium paid in. So there's really great designs. I think the products have evolved even over the past few years. So really great designs that we have access to make powerful policies for implementing this strategy.
There's a lot of advantages, even in the early years, with the designs that we can do these days. But one of the things that this book does a good job of doing through its storytelling is getting people to think about the future. If you fast forward 20 years from now, and just imagine that when you see a business opportunity or an investment opportunity, you have somewhere that you can go, guaranteed, where you could potentially borrow tens of thousands or hundreds of thousands of dollars at a very low interest rate, and it doesn't stop the growth from happening so that you can do these other investments. Wouldn't that be amazing? Instead of having to go to private money lenders and paying a bunch of extra interest or other fees or having to get qualified and approved, you got to think about the future. That's what this is all about.
And when I set out to get my policies in place, and that 20-year mark is actually a big part of where I was thinking. And looking at this, if I continue to fund the way that I am, I might be looking at having access to millions in order to execute on a real estate deal. And that's really powerful. I won't necessarily always do that, but really powerful if maybe I'm doing flips or other types of things, or purchasing a business, whatever the case. And there's not these external underwriting factors that you got to worry about. And that's really powerful as well. I mean, you want to be disciplined. You don't want to just throw money out there. And one other thing, by virtue of the fact that there is interest when we use these funds, it does make me think, okay, is this a good use of my money? Am I going to beat that interest that I'm paying on that? So really, we want to use the loans to build wealth or build cash flow, and use that to build further assets as we implement these banking policies.
Well said. I think that wraps up episode 2 here, where we covered chapters 4 through 7. Do you have a call to action for our listeners this week?
If you didn't catch the first part of the series, I'd say go back and check that out. I think that as we go through this, it will be helpful to start with our breakdown. So check out episode 1 of this breakdown of Nelson Nash's book.
And I'm going to say, make sure that you go get the book. Ideally, these episodes are meant to be listened in conjunction to you reading the book and then joining us with this so that you can see some additional insights within each of these chapters. If you have questions about these, find us on YouTube, find us on our Substack, send us those questions. We're certainly happy to help answer any questions you might have as you read the book and as you listen to these episodes. Next week, we're going to be covering chapters 8 through 10, Conquering the Human Element and the Financial Laws. Nelson's got some more stories to go over in this, and hopefully we'll be able to provide some good insights as well. With that, my name is James Barber, your Oregon Cash Flow Pro. I'm licensed for life insurance and annuities across the country.
And I'm Carlo Ucara. You can find me at netwealthfinance.com or on YouTube at netwealthfinance. And we'll work with life insurance clients across the country as well.
Take care.
Thanks for watching.
The next 20 seconds determine your future. Subscribe, meet with us, or continue educating yourself with these videos right over here.